Hello everyone, welcome to the Ichimoku charts.com daily analysis for Euro US dollar FX for Wednesday, May 1st, 2013. Well, a continuation of the trend to the upside today. A candle that's made a higher high and a higher low, but a candle that hasn't been supported by the buyers. The market has closed down towards the low, so at the close of trading the sellers have taken control of this market. It doesn't give us a lot of confidence in this trend continuing to the upside. We do, however, have a white body candle, so the buyers have made net bullish progress on the day between the open and the close, but a substantially smaller amount of net bullish progress than the previous day's trading, and it does suggest that there is good potential for a change of trend. Now, this is a potential Japanese candlestick reversal pattern. It's a shooting star type pattern, and we have a star where the body of the candle is pretty much gapped up from the previous body, so we have that small gap in there, or basically with the market opening at the same level. It's technically not, but it is a gap. And then we have this, so the small body with a very large shadow on the top of that body, like a shooting star moving across the sky. So it is a potentially bearish reversal pattern, and we do require confirmation of that. And the story here really is the price rejection. That shadow highlights the downside price rejection from this area above where the body of the candle was trading. Confirmation of this pattern would be a candle with a lower high and a lower low, so the low of this pattern becomes very important, and close by to that low we have strong support at 131.45, previously resistance. So the market will need to find some decent downside momentum to breach that area. In terms of the pattern yesterday, I highlighted the strong resistance around the 131.96 level, where we had this these two highs here with the strong previous price rejection. The market tested above the 131.96. It even traded up towards the top of the cloud and towards this highlighted yellow zone that we've been looking at previously very often, and a very strong area of resistance for this market. It's extending up to around the 133 level, so very strong resistance. Strongly rejected from there. Very good setup for a potential change of trend to the downside. In terms of the Fibonacci extension, the market hasn't really interacted up here with the 261.8% level. The market traded through the 161.8% level in a bullish manner, but now we're seeing the buyers failing to support this trend to the upside. It does suggest potential for a change of trend, but here the Fibonacci technique with the Fibonacci extension hasn't really been of any use at the moment. We don't have confirmation of that trend. This trend could potentially continue up and the 261.8% come into play, but no sign of that happening. However, with the Fibonacci retracement technique, we have seen some interaction here, and it does strengthen our probability of a potential change of trend. For the previous day's trading, we saw the market trade through the 100%, so we're in an expansive mode, and here we've traded exactly to the 161.8%, being very strongly rejected from there with a potential candlestick reversal pattern, and it does suggest that there is a strong probability of a change of trend back to the downside. In terms of Ichimoku, obviously a neutral market in big picture terms by trading within the cloud. Previously the market was trading down below the cloud, found resistance there. So we've seen somewhat of a change of sentiment over the previous 3 trading days, and we're maintaining that price activity within the cloud. We could potentially have that first time frame change of trend with the market still remaining within the cloud, trade down and find support. The market has been rejected from the top of the cloud. That's not unusual to see, but there is still a possibility of a breakout up above the cloud. So we have a flat area of the cloud here just above the 131.96 area. We do need to be aware that any potential breakout and close up above a flat area of the cloud could be a false move, so be aware of that if that does occur. And we do have close by strong resistance above the top of the cloud too, so not a good likelihood of follow through by the buyers. More likely that the market will test down to lower levels and then perhaps bounce, but neutral in big picture terms. So a market that we really do want to see a trend develop in that higher time frame, and we're not likely to see that in the near future because the buyers are no longer supporting this first time frame uptrend, and suggesting that the buyers won't support a breakout to the upside. In terms of the other Ichimoku indicators, the market remains bullish in the medium and long-term timeframes by trading above the Kijun-sen and Tenkan-sen. That's the green line and the pink line here, and the checkout span is above the corresponding price action. So that's confirming what we're seeing in the medium and short-term timeframes, and it does suggest that if we do see a breakout, that it will be to the upside. But bear in mind the very strong overhead resistance. Now, both the Kijun-sen and Tenkan-sen at the moment, with this candle that hasn't fully developed, are pointing flat, so we have to ignore that. But looking at the Tenkan-sen here, that is pointing up quite sharply, and that's reflecting some solid upside momentum in that short-term time frame as well as in the medium-term time frame here. But when the market does come off, that Tenkan-sen tends to be the place where the market finds first support and bounces off there. So there is potential for the market to trade down through to this 130.99 level, basically 131, and find support, and for to see the buyers come back in. We will need to trade through the 131.45 level first, but really a market where we're not seeing any clear direction in the higher time frame at the moment. Bullishness in the medium and fast term time frames not supported any longer by the buyers. The sellers have taken control of this candle and have set the market up for a potential change of trend back to the downside.